Leave a comment if you're on here. If you're on. All right. All right. So just gonna go over the these basic right here. I'll make it like kind of short, straight to the point. All right. So. Okay. So the first thing that I do, this is the first thing that I do, first thing that everybody should be doing. I go to the day chart first. I go to the day chart first. That's like the first thing. Because if I don't go to the day chart first, I'm not gonna know my overall bias. I'm not gonna know my overall trend. None of that. And I want to be able to trade with that, because if I'm not trading with that, then I'm kind of like, put myself in a hole. And then of course the second thing is, after you go to your day chart, you want to go to your hour chart, and then find the candle that matches your trend from your day chart. So if your day chart trend is in an uptrend, then you want to find a buying candle. If you are in if you're in a correction in the market, then you want to find a seller candle. And then of course you want to obviously always use proper risk management, and then secure your bread whenever you feel like you need to secure your bread. So I'm actually going to put this aside. I'm going to show you this. So I'm on my 1 hour chart, and I can spot something over here. I can spot something in this area. I want to go to the day chart first, because the first rule is going to your day chart. Do this in mind. So, like I said, the first step is to go to your day chart and then mark up your day chart trend. And once you mark your day chart trend, I have to fix it. All right, here we go. So yeah, once you mark your day chart trend, right, the first thing that you're gonna do is you're gonna see like what market is. So I'll mark this up. I'll mark this up. See, here's maybe like a potential 1 here. Then I have a 2 right here. My 3, my 4, and then of course my 5 is gonna end up taking out the high. So yeah, that's in a nutshell how this looks. Now, like if you wanted to do it, let's do it like this. Let's do it like this. 1, 2, 3. You could do this. It makes sense if you did it like this. Yes, it would make sense. If you did like this, it would make sense. So if you did like this, it would make sense. The only thing with this is, Of course, the market had like a little drop and it went up, whatever. So the confirmations that you need to know whether or not this is in a correction or not, because obviously the trend it looks to be completely over. Now, a lot of times you can still catch something, especially when you see that the market has potentially a high point to be taken out. Let's grab the fib. Alright, so you got your fib and drag it back down. I was talking about a 10. This area, these green shaded areas are going to be retracement. So for me, seeing that it came in here and then, of course, bought back up, me knowing or seeing that, I'm thinking that this market is most likely going to take out this high. So I'm going to actually put a line here, and this is just my opinion. However, if it does not take out a high point or whatever the case may be, if you're looking at this, it won't matter regardless, because the next rule, the next confirmation, or the next thing that you have to do is to find a candle that is corresponding with your trend. Now, we already established that this is in an uptrend. The uptrend may be complete, but here's the thing: we see a formation that lets us know that these spots, it's a little like right here. Even though pricing actually fully come into there, it still came into this box, rejected off of this box, and then it started to work its way back up. So when it does something like this, that's letting me know that if I get any flat bottom candles, that momentum is heading in an upward direction, and it's probably most likely going to take out this high point. And then now that'll be my new high. And the reason why I say sometimes it won't matter if it reaches all the way to the high or not is because you can get something off of just one candle. You can get something off of just one of these candles and be good for the day. Now look, this whole candle is 115 pips, right? That's good for somebody's account. I think I mentioned it before. This candle right here is good for somebody's account. Of course, it's not a flat bottom, but if it was a flat bottom, it would be good to get in on that, and you can secure your profits and be good and be out of it. Anywho, so how you know that? Again, how you know this is a correction is, of course, if it comes into this orange box. And that's how you know that that's a correction. That's the simplest it's gonna get. Orange means correction. That's it. Right? So I'm gonna delete all of this. I'm actually gonna delete stuff that I actually put on there. So because I see that this somewhat has momentum going on, I'm gonna go to my hour chart and I'm gonna wait for a confirmation to get in for a buy or something like that. If I see something like this, it's still a projection. It's still a flat top candle, but this is still a weak rejection. This let me know that the market could potentially be reversing pretty soon. But again, you kind of want to wait it out to see what the candle's going to do before we begin to. And then But again, so back to these rules. So um, if let's again, if this was an uptrend, and for whatever reason, I see that the market is going in a fifth wave or something like that. I know that the market is in an uptrend. I know that the market will be going into my fifth wave or whatever. So I can mark off one, and if that was the example, my next step would be to go to my 1 hour chart, which I'm on now, find a candle that is corresponding with that trend. So I want to find a flat bottom candle. So once I find the flat bottom candle, I'm good. So here is my first flat bottom candle right here. Right here. And I would enter here and I'll ride all that. Or I could ride it up to this high point here. Actually, I'm gonna get a trend line instead of time. So yeah, so my first flat bottom candle, I could have got in here, and then I could roll up to here, and that would have been a good solid 44 pips. That's more than enough. And I'm not, something like that. And again, of course, the third rule is to obviously use proper risk management, secure your your funds whenever you feel like you need to. So like kind of like how I just did. I wasn't in there a whole trend. I wasn't in there like half a trend or anything. I was just in there for, just enough to be able to obtain a decent amount off of a small lot. So let's take a look at. Let's see what clients got. So pretty much the same. It's pretty much the same as that thing. Kind of the same scenario, especially when you have weak rejection right here. Like I said again, it is a flat top candle. That doesn't mean that the market is moving with momentum, but you still can pay attention to these big wicks, because those let you know that the market is pulling up. Let you know what the market was pulling up. All right, let me go let's go back to Ethereum real quick. Let's show you something. So let's just say on this day chart, or not the day chart, but this hour chart. On the day chart, we had marked up that this was, like we marked this was our fifth wave period right here. So we're like, all right, so reversal indications. Candles like these, like this isn't a reversal candle. This is like kind of like it's wanting to reverse pretty soon. This candle right here is a for sure. This market is going to go the opposite way, and then you finally get a seller candle, and then after that, that first seller candle, you get a flat top candle, and then the market's going to drop. So even if this wasn't a full blown out correction or pattern or like an A wave or whatever, you could have still caught something off of this going down, and you would have been good. Now over here, it kind of the same concept. Because going down, that's 87 pips. Me personally, I probably would have collected 40 pips off of that, and I would have been good to go, and I would have been out of that. Regardless of what the market does after that, it won't matter because I would have already secured what I needed to secure, and then I'm moving on with the day. Let's see here. Yeah, I think because I don't really see anything really over here. But let's go to. Let's go to the DXY. All right, so again, just keep this in mind for when the market opens back up. This is just a little something. On the DXY, mark this up. Here's pretty much what will be like a double bottom. And of course, this is still a correction, but it's also a double bottom. This low has not been taken out yet. You see, it came back down to this exact low point, but it did not take it out yet. So I'm thinking that right here in this area, which it is in this area, there's like a form of like a order block going on right here. Consolidation and things like that. But 9 times out of 10, this is going to break out of this box, and this is going to take out this low. This is going to probably keep going down for a while. I think the dollar's going to drop a little more. Definitely going to drop some more. You look at where the dollars are now. It's got this vast majority of space over here just to collect, get imbalances or get liquidity or whatever. All right, but this is just my opinion. Like I spotted this, and I'm like looking at this, and I'm like I like how this is set up because I know that with price action, this is most likely going to take this out. Now, if the DXY is dropping, then that just means that everything else should be pulling up. When the markets do open, right, things like Euro USD, GBP USD, and all those things should be pulling up. So let's go to here. I want to see if I see a reversal candle somewhere. It's kind of like indecisive. Okay, yeah. It's like right here is a reversal candle for sellers. But again, there's no clear sign until you get a flat top or a flat bottom candle at which way the market is actually going to go through. So me personally, I just waited out. I watched to see what the market is going to do, and I'll just be patient. And then most of the times, like let's just say like I'm in a trade or something. Let's just say I was in from here. Let's just say in this area I was in for a buy or something like that. I would have known to have, most likely in this area, you would think a person would take their profits because again, nobody's trying to be in for a whole trend or for a whole day or whatever the case may be. They are only in to collect a little bit to get their account where they want to get their account to be at, and then they're out. And that's just me because most of the times, whenever you set like a daily, not like I think I said like a daily goal. Most of the times when you set it, you have these expectations that you're gonna reach these, this goal. Like if you wanna, make $200 for the day. Sometimes if you say, "Oh, I want to make $200 every single day," sometimes when it doesn't happen, you stay in a trade longer, and now you're liable to lose money because you stayed into the trade longer than you should. And you could have just taken what the market gave you from the jump. That's just something I had picked up on over time. Something like this, like I said, this area, like if this was like let's just say this was the hour chart, right? This was the hour chart. This is the day chart right now. This was the hour chart, and I was in from here to here for the buy. I would have known to get out of that trade, and even if I got in here, I still were right here, which is where it kind of started to, form that first seller candle. I would have known to get out of that trade or whatever. But most likely, if I use proper risk management, right, and the market skyrocketed up to where it was, then I most likely would have took my profits already before we even got to this point. And then I would have just watched what the market was doing, waited for another opportunity, maybe got it over here or something like that, and then I'm good. And on this, let's see here, on this, this is a clear uptrend here. So for this Euro USD, I mean, it'll be kind of the same thing, same concept. I work my way down to the hour chart, and I would just look for some form of buyer's momentum. So like right here was buyer's momentum. From here all the way up was buyer's momentum. So it's really easy, especially once you keep doing it, and then you go with your gut and you use those rules so that we can get the best out of the market that you can. I think I'm trying to see something. I think later today. I'm trying to actually look. 26. So yeah, I think like later tonight. Later tonight I go live again. But if you guys don't know, like my live schedule and all that kind of stuff, just go to my YouTube channel, and then you're going to see all the upcoming live streams that I have, the times, the dates, all that. Cause I normally make. I literally make my schedule for the week on like Saturdays, sometimes before that. But anyway, if you have any questions or anything like that, hit me up in my Telegram chat or I'll message chat, whichever one you prefer, or you can just text me. So I'm trying to see, like, there's a I think it's tomorrow. I go over how to mark up a chart. This upcoming how to mark up a chart, how to spot a trend, stuff like that. Simple stuff, just to give people a refresher on how I actually see these things in the market, so that way you're not confused on how to do it. And yeah, but I'm out of here.